Great and beautiful morning to you all, wherever you are joining me at this hour. Welcome to 426th edition of Invest Data Trade Academy Live with Ambrose. Today we are looking at where is the place of macroeconomic data. Before that, look at what is happening in the global economy. I will say that Asia market, as we speak right away, has opened the last trading day of the month of May on a positive note, despite the expectation of more data, inflation data from Europe, from US, and also even from England. This data also will go further to give a clue what the Fed will be doing in their next coming meeting. This is why you see that the market, despite that most of the market closed the last week on the loss position, but they are opening the fourth trading day of the week on a positive note. And this is what we expect that it will continue until Friday, which we expect to see the personal consumption expenditure price index of US economy. That will also give a clue what inflation look like in that domain. But I believe that as investor, no matter the market you are trading, understanding the power of macroeconomic data. When I mean macroeconomic data, I'm talking about here inflation, GDP, and others. Labor report from US and other economy. You must understand how these numbers are coming and how you can take advantage of this number to make what to make informed investment decision. This is how to to play the market successfully if you really want to also make money in this market. You don't stand in one leg when it comes to what making money in the equity space. You must understand how the market play and also how you can also take advantage of the sentiment in the market at any given time. Like I said, with the interest rates also expected to remain high on a longer time because inflation in US are not really cooling as expected. That's why the Fed chairman said his eye is on macroeconomic data, not on feelings, not on people's opinion. That until the data confirm that yes, they're having really cooling inflation to hit around 2%. That is where they think of. But I'll tell you that the ECB, which is a European zone, is already taking a lead to be one of the first big bank in the world to start cutting rate in their next meeting. If it happens, we need to send another signal to what to mature the economy. We saw that last time, in China pulled back their interest rate just to what to fire the economy, to kind of stimulate the economy, and also the government is investing in property market in China just to make the economy to keep running. And like I said last time that in China, we saw that inflation for the first time were up after fear of deflation. I know have kind of pulled many market players there that there is no people purchasing power there. But now I think that means prices are coming up again, and government successfully by injecting funds to the economy in China. These are things that is playing out the entire market. If I will tell you that there's no cause for alarm. But the good thing is that the Marshall sell in May in the economy and buy in October. Is this still holding? As all eyes are still on this personal consumer expenditure data that awaits on Friday. I believe that this will go to guide us here, even here in Nigeria. But if you come back to US, I've told you about the European zone that the move is that all eyes are still on what the central bank there will be doing. And I'll tell you in the next meeting, they have even signed that like they'll be the first one that will start cutting rate. If that happens, go to with other central banks of the world to see that when inflation is high, interest rate is high, we know what they part. But when you see that inflation is cooling down, interest rate is cooling down, it's another mood for the economy. That's why in any economy we have this five sector that I always call that they have early expansion, mid expansion, and late expansion, and also have early contraction and late contraction. And now, whenever you see high interest rate, high inflation, and declining productivity, with GDP, it tells you that the economy is already on a contraction. And which you look at the figure that were released last week of Friday for Nigeria economy, already signal that our economy is already in contraction because already we're experiencing high interest in the history of Nigeria. Inflation have been the highest in the history of Nigeria, and also the GDP have confirmed that already the economy is contracting. That means in the last 1 year, what have been the impact of policy, of policy reform of the government and its economic managers? Are they really giving us policy that are driving the economy? It was to ask our leaders. The last 1 year, we have seen that data that are coming are not pointing that we are seeing impact of this reform that the government have been on since they came on board. Is it going to be continued, or is it because it's not 1 year? It's short for us to assess the impact of their policy. I believe that policy that will make impact, you see from the one, yes, start giving a clue, and as we go into 1 year, into 1 month, 2 months, 3 months, a quarter, 2 quarter. Now we're saying 1 year. 1 year is 364 days. If 1 year government that or the policy we have seen at the beginning that everybody welcome the floating of naira, removal of subsidy. No, I've seen all this, but monetary policy has come a lot to push everyone to the tight corner. That even the private sector are not having access to what cheaper fund to run their business, all in the name of attracting foreign investor and to manage their FX. I know on the expense of what the economy, and the economy is what iron what that kind of oil the movement of the economy. But if at this time that people are closing shop, they are not employing, even if people are not earning, how what will oil the economy? I think we'll come to that at the time to look at all these macroeconomic data, how you and I as a trader investor should use it to also to invest. Like I said that in Europe, especially in England and US, today there has been a public holiday as a result of what Memorial Day. For me, that means this market will not be as busy as expected. But from tomorrow after the holiday, we want to see a kind of rebound. But don't forget that last week this market all closed down in the red position. But I believe that as market open fully, look, I just said earlier, if you remember, I've said it that Fed is also looking at what data, and this data is what we expect that by February this month we're going to see that the what we call a PCE data will also be available for market for investors and market readers to know exactly what to do. Like I also said that ECB so the one of have been entered the lane of what of rate cut. If that happens, that will also send a good signal to other markets. Asia market, I've said earlier, has opened higher, but expect more Q from what from you see US decision on what on inflation rate and what an interest rate coming days. These are the things that we expect that also will shape the market in that area. But I believe that if you look at African market to speak, African market is mixed. Why was it that NGS Nigeria market is looking up slightly again? Oil price in the international market have also slight up marginally, even as OPEC meeting is supposed to occur next week, the 1st of June. That will tell you that, or 2nd of 1st, these 2 days, holding, and that also determine what the position of the OPEC, all these oil producing nations, what to be their position to. So exactly the next level they are taking in terms of production cut or supply, knowing that the global economy is somehow being influenced by what by war and all those things happening here and there. But we'll come back to Africa, as I've said earlier, and Nigeria market is looking up. This hour, which is for me is a good news for the market because it shows that after we have seen a series of losses, this month of May and April, when the market becoming attractive, we have seen that the Fugas are the top gainers this morning. Let's see, are they the entry point or are they trying to see another dip for us to dive into the market? We are watching to see what the market will play this morning. For good that the market has opened in green this morning for the first full trading, last full trading week of the month of May. Yes, we know that it might not turn any much, but let's be that investors should take advantage of pullback to buy into value at any given time. It's very, very important that this is done. Yes, we come to looking at macroeconomic data. What is macroeconomic data? As a trader or investor, look at what is the place of this data in your investment decision. These are factors that drive volatility. I know that volatility is the beauty of a market anywhere, anywhere. In any market you are trading. That's why I said in any market dynamics, volatility is what creates opportunity for you to buy low and sell high. And what drives this volatility is perception and what sentiment, psychology of people in the market. And what drives their psychology is economic data, news, company news, what is happening around, either the election is around, or whether the government policy. These are things that drive the sentiment, either positive or negative. And you must understand the place of this sentiment in the market. That's why you, as a trader or investor, you must understand why this data come and how can you use it to your own to make informed, trading or investment decision. For macroeconomic data, especially the one we have seen in Nigeria, we have seen our inflation figure hitting almost at 33.69, and also we are seeing our GDP declining. From even for the past 5 quarters, have been declining. Despite that, they are still in green. That means they are not in negative, to say after 2 negative position of now declare recession. Or for me, we are seeing that this has happened constantly for 5 quarters. We are seeing our GDP declining. It tells you that we need to sit up at attention, the economizers. Despite yes, we are seeing that the policies are laudable, these are good policies, these policies are credible, but we are not seeing reflection on the economy. You can't, for how long we separate the economy from the market? That's why I said that the market, equity market, is already mirroring what the economy as a result of what this high inflation, this high interest rate, and also declining what? The declining GDP. And that really kind of give you that the economy is at what? Are they no the late what? Contraction. That's why we are seeing everything at the peak. And also while production, either industrial productivity or national productivity is on a decline. But good thing is that as an investor, you look at all this. And in an environment where we are now, despite that we are seeing that CPN have a kind of high rate in their last meeting by 450 basis points, breaking about the 750 for the for the first 5 months of the year. That means that in their three meetings this year, February, March, and the one ahead in May. This month, I can tell you that we are not seeing this addressing our inflation. Inflation remain on the peak, on the up direction. That means you need to change strategy for me and for investors. It sends a signal. Yes, we're seeing that the physical market is enjoying the high interest rate, and we're seeing fund leaving the equity market to that. But you as a trader investor, you ask yourself what from this inflation figure or the rate interest and pick the stock there. And what you do again, you use your what we call your technical analysis to know whether it's the right time for you to buy or sell. These are the things that you need to do when you are using your macroeconomic data. It's very, very important that you understand how to use macroeconomic data in any market you are playing. Once you're able to do that, it go a long way. And this macroeconomic data is also what drives what the sentiment we are saying. As data come now, you can see that how all eyes are still on PCE of US. Also, we expected this GDP for a long time. That's come to give us the state of the economy in the last 3 months. This is how to invest. Now you are the sector that push or that contribute toward the positive GDP that we recorded. Now is where you also look at, you align your portfolio. If that trend continue, that is how to invest. That's why you must keep your eyes on this trend, so that at the end of the day, you're able to know exactly what to do as investor or trader in any market. You don't just invest for investing rate and go and sleep. As you are investing, you are looking at what is the factor that will drive your investment decision. That's why I say the sector that is doing well, the industry that is doing well, the companies that are standing. These are where it also in terms of earnings. After looking at it, you now go back. What is the right price to buy? And that right price to buy is what technical analysis will do for us in any market. Whether you are trading, you are trading, FX, you are trading, cryptocurrency, you are trading, crude oil, you are trading stock, anything you are trading, you must understand the fundamental. Without fundamental, now technical come was fundamental has the way of driving the sentiment of the people, and your chart will tell you where is the direction, where are people moving to, because I said it is the same people that are trading the market, the way they react. If you're able to use your chart to see the actual called chart pattern to know exactly how they behave in social period, and when social data come how they behave, it will also help you to make what informed decision. It's very, very important that we understand all this holistically. That also will help us to make what informed investment decision anytime, any day. And that's why we must keep our eyes on this data to know exactly what the role they are playing. Like I've just said, it's very simple that you know it, and also because you understand it, when it comes, it gives you an insight and also act with it. And that's why I'm not surprised that if you look at the Q1 corporate action, you can see that there was a missed number, and seeing GDP declining, it's not surprising because the company numbers or earnings are giving us insight what we expect from the economy, because these companies are not operating outside the China, that they are within the economy, and their performance also is what we're going to see in that GDP. And that's why as the GDP figure came, we are not surprised at seeing that we were sliding already, and that is what I've been saying, that yes, the policy of the government, I think this time for our managers to rethink and know what to do to address the issue as to speak. Yes, back to the market. We want to look at what is the state of the market itself before we come to our chart. Look at that. Speaking of market data, it's reading that 97,855.19. Market is up in terms of a basic point with 239.68, representing 0.2% up in the grid. This is the state of the market. If you look at market internals are positive. We're having 11 gainers and 9 losers at this moment, which is for me is a good one. That market is starting positive on the last trading week of the month of May. That usher us to the last month for the second quarter of the year. That means we need to start preparing for second half of 2024. And I tell you that all this data we're seeing will guide us to know exactly what to do. So looking at the top losers, from the positive market internal or call market breadth, I see that the top losers are Cabaton, still analyzing name insurance, Conhol and Owando. That the top losers of the top the chart this hour. But on the gainer start, UBA is leading. When UBA is trading at 20 naira 50 kobo, up by 1 naira 30 kobo, representing 6.8%, followed by mutual benefit 5.8%, trading at 55 kobo, Fidelity 8 naira 75 kobo, 5.4% in the green. Nigeria Brewery also at 12 naira flat, 5.3%, and now ICO 1 naira 1 kobo, 3.1% in the green. But in terms of activity chart, in terms of volume, I was saying that FBN holding is leading in volume. Today, 10.3 million share at 21 naira 5 kobo, followed by FTN Cocoa at 7.9 million share. Mutual benefit at 6.1 million share at this hour. UB at 5.8 million share, and Veterans Capital, which is also insurance company, at 59 kobo at 5.6 million share. This is the state of the market right away as we speak. Good thing is that markets remain in the green at this hour, up by almost 0.2%, approximately. For me, it's not a bad one. But we want to come to the chart now to look at what the state of the market in the first trading day of the last week for the month of May. Let's look at our chart to see exactly. But before we start calling our indicators, we want to look at where is the market doing. If you look at your chart here, this is what we call index action. I see that there's a kind of a reversal here after 3 days or 3 sessions of pullback. But the good thing that I told you earlier that this is a strong support level that market has to test to confirm continue decline or call a markdown. We can see where it is now. This has been the big candle that market has moved above marginally, but still within that. Once market is able to take away this candlestick, that will not confirm. But don't forget that it has a wing that up to this level around 96,980 something down here. These are the state of the market. Just what to see that once you understand this candlestick of index movement, it gives you a lot of insight what is happening in the market. Yes, people want to go back to call up our indicators to guide us in our analysis. Call indicators here. We are taking our, as usual, we are looking at, go down to our money flow, MACD, money flow, and what I'm moving at it exponential. Both we use 8 in this class, and I know that many of you, unless you are new today, know that that is our T line. We get T line in this class. Don't be surprised by referring to what the 8-day moving average. One thing that is very clear that I will let you know that virtually every trader who trades for one market condition or the other, market goes up or down, and because market goes up and down, it gives opportunity to buy low and sell high. It works until it breaks out. You can see a market that is going up. At that point, that it pull back. That pull back, like I say, market that is the breakout. People want to say once it breaks, whether a reversal up or down. That is why whether in a bearish or a bull market, you must watch out for what a reversal. That reversal, an uptrend, is what we call the supply zone. Why that reversal for the bearish market is what we call the demand zone. You must understand this, as a trader. Or this will help you to know that market is in this direction. It's about to turn, and we're able to catch the market that turn from the bottom up. You join the rally, the ride the uptrend, and that gives you money. And also, when the market is going, able to also take profit, and market comes to a level to support level, you jump in again also to make money. This is how you must follow the market any given time. It always breaks either up or down, or top or down, depending on the market direction. Market do not always go up. Even if you get the market in the up direction, you might be lucky and you catch it. Then you can also enjoy the upswing. But also don't forget that it's inevitable that market will not remain in up direction. Market will also break down. But when market break down, don't forget that this is an opportunity. But it is how you see it as a trader that will help you to know to position well. The big secret that many traders in the market that don't know that is that successful traders in any market, or traders time the market. They time the market. Timing is key in the market. And for the time in the market, they don't trade always. Or they look for opportunity to trade. That means you must look at either you are a seasonal trader looking at to trade earnings and also. They don't trade always. But when you're going to trade always, you might get your finger burned. get your, either your money also at the end of the day will go to that. It depends on the market direction. So, but the reason that when the market is going up and down, it's a sideways market that always put players on, because at that time, even the market or the operators all will know, be confused, because there's no money to make in that market. But that's why I tell you that what, regardless of the state of inflation in the economy, regardless of the high interest rate, 1 year government policy or reform impact, news here, macroeconomic report here and there, I'll tell you that it's more than this award drive volatility. In all this, there's opportunity to make money. There's a time that you see that market will be disconnected from what, from the market, or you see that there's also market is also mirroring what is happening in the market or moving in this direction with the economy. But you as a trader, you must know that even though there's a down market, there's opportunity in the market. It's that opportunity that you need to take time and work and spot. When you go to spot those opportunity and take good position or take action, because one thing that is still opportunity and you not take action. When you take action, it don't take you up to where you are going, because you have your goal that you are trading, and once you are trading your goal, you always follow to achieve something. But when you are following the market, bad will go up and down. You must know, that's why you must know when to be the market and when to. That is why when I was shouting, take profit, so that it's part of the market. Profit taking is part of the market dynamics. You must understand it. That you know when to go cash. If you are taking profit at the market, that you'll be smiling to buy to volume or to buy to good price. Because market the way is going now, but I'm not seeing a serious pullback that market is. That see from here you can see that where the market is now. The market came from as low as almost 45. You can see that where market is almost to test 106. But now market is still trading above what, above 97,000 mark of terms of index. For me, the market is leading strong. And if you look at the index here on the daily chart, that's why I was seeing market is up marginally this morning. We are seeing that money flow is looking up. You can see it on the daily chart. But also MACD is slightly bullish but not strong. These are the things that you also look at in the market. Also look at the 1 hour chart. 1 hour chart, you can see here that market is slightly above the key line. You can see it here, and also MACD is about to confirm an uptrend. You can see that once the blue one cross the red one up, you can see that that is an uptrend. But relatively, yes, you can see on the 1 hour chart that the money flow is weak. But I believe that it's still looking up gradually to show you where the market is going. Then we finally look at the other time frame. Look at the 2 hours. Don't forget that I don't joke with it. You look at the 2 hours. 2 hours that the market does a bit try to like break out the T line, but just flat on the T line now. Even with a small wick here, I think that money flow is looking up on 2 hours, and MACD is bearish on 2 hours in terms of chart. In terms of MACD, let's quickly look at 4 hours before we look at one other stock before we call it a day. On 4 hours that you can see the market is like trading. You can see it straight on the T line, and MACD is not bullish, not bearish now, almost flat. I see the money flow looking up to read the 25 basic point. For me, there's no fund in the market because this low market fund that dropped from even as high as 50, because they're coming down to almost 10, forcing trying to go up. We need to also understand that this is tell that the alternative market is also competing with what, with equity space. But despite that, there's opportunity in equity space that you can spot and also make money. Yeah, finally, before we call it a day, we could look at the the stocks that are making headline is now in terms of topping the gainer chart. Let's look at the UBA. Now, UBA is one of the stocks that are this morning that are topping the chart. Let's look at UBA. UBA, you can see UBA on a daily chart, try to come up. It tested the T line. You can see when it has been below what? Below the T line all this while for how many? For more than a week, getting to 2 weeks now, trading below the T line. But in the cost of MACD is also very, but consider that this histogram here is already looking up. Once my blue one cross the ground the confirm was an uptrend. For good thing that was that morning entered the stock this morning, you can see that there's a kind of uptrend looking up in terms of money flow for UBA. For me, it's a good one. Let's see what I believe that once that seen at the end of the quarter, I look forward to see these banks with their numbers. That will change the face of the market across the the banking stock, because those that pay what interim dividend. Quick one, let's look at what is happening and also in Mansard right away. Let's see what is happening there. What is happening in Mansard? Let's see. These are insurance companies. Let us see what is happening. You can see that this morning that the stock right to rebound. This on the day chart, you can see that it has come up to like 520 right now. Let's see what, and you can see what MACD is saying. MACD is confirming that this is stock to watch. You can see that almost looking at what the blue and plus one. You can see that the histogram is already kind of ascending. Up. Once it crossed and confirm a bullish MACD, that hotel that also the form strengthening gradually. You can see after it has pulled back, you can see this forward a day chart. If you look at 1 hour chart for Master, what we call it today, Master and one, you can see that that trend is still there. 1 hour, you can see that almost magnet right to cross. You can see money for reading almost 29. This 1 hour chart, I can see that the last 1 hour, you can see when the market opened, when like 3 hours ago, you can see that it went up here. But still, you can see that it's still reading 55 naira 20 kobo right away, there on the chart. So the price action tells us that yes, the stock is trading above the T line right away now. On 2 hour chart, you can see here strong blue line, and then compare see bullish engulfing, taking care of this already. This like you can see that this one like a resistance level now. This 5 naira 20 kobo. A breakout you will watch out either looking way to go to 550 or 550. But see here, I see that this dotted line here that is like a strong resistance level, which is also got top 1, 2, 3. Let's see a breakout to confirm where the market will go from here from for Master. Finally, look at 4 hour start for Master. 4 hour start for Master also is also looking great. But money flow is looking down for 4 hour start. You can see it here, sign of weakness. MACD is already crossing to become bullish of 4 hour start. Let's keep our fingers crossed as we also look at as investor that digest the macroeconomic data. Recently, one especially the GDP, and also all eyes are all ears are open to see the next statement from the government after as they are about to celebrate 1 year in office. I think it's time for them to score themselves, scorecard for the what has happened. Is the economic data looking good, or what is they need to understand that the policy that made is it positive, or where do you want to add, or what you want to subtract. This is process of doing a kind of review for every 1 year. As well, government have said 1 year. Let's look at their scorecard, and they too also look at their scorecard and see where the economic managers have to do more, the ministers have to do more. These are the things that is good at you must take time to evaluate your policies and what you have done for a period of time. On this note, I'll say thank you and see you on Wednesday, hopefully by God's grace. Enjoy the rest of your trading day. Bye.